in Greg Fleming, President and CEO of Rockefeller Capital Management, former president of Morgan Stanley Wealth Management, major player at Merrill Lynch and everything that happened in the financial crisis. You're almost you're kind of a legend, almost, Greg. Is that overstating things?
If it's coming from you, it's not. I'll take it.
Yeah. What a week and what a period we're in right now with all the cross currents. I think you've got something that's pretty interesting, though, that explains a lot, because we can't understand how the economy is still appears to be so strong after 500 basis point increase in interest rates. You think maybe 6 to 7% government spending as a percentage of GDP accounts for some of that?
You know, what's remarkable to me, Joe, is that it doesn't get even more attention than it is. And what's happened in recent years is clearly people are around the world, they're looking for alternatives for the first time, right? Now, the reason we still have the world's reserve currency in part is that there are no viable alternatives yet. But if something emerges, if we're at 150 or 200% debt to GDP, and there are more viable alternatives, then
because MMT doesn't work unless you've got the reserve currency. I don't know if it ever works, but there are people still saying that this is fine because we got the reserve currency. We can spend we can print money, so we can do whatever we want.
Look at the whole supply and demand part of it now with the Fed. I mean, the amount of debt that we have to put out there, and China's pulled back as a buyer, Japan has pulled back as a buyer. There's a possibility here, just on a supply and demand basis, you're going to get a more upwardly sloping yield curve, just because of the need to get this much paper out on a regular basis. So this is a big topic.
So, I mean, it puts a lot of pressure on the Fed to want to cut rates too.
It does.
But
it really
they
does.
Can't have the inflation problem roaring back.
Well, I think they jumped the gun in December.
Jumped the gun
in terms of moving so quickly from raising rates to signaling that they might go to a very different posture, and there may be rate cuts as early as March. I mean, the language in December was pretty dovish. And I think they did that because they clearly blew it the first time coming out of the pandemic, where they waited too long to raise and then had to really chase it 75 basis points at a time, which helped create the situation for the banking crisis last March. So they wanted to make sure that they were ahead of the curve this time, but they jumped the gun. They set on a path, and they should finish that. And I think they were quick they surprised everybody in December. And now they've tried to talk it back.
The market's been trying to push them there, too.
It has. And I agree with Mohammed that data month over month is hard to internalize short-term movements in data and make decisions that are as fundamental as this, which is why I think they're going to let it go. I think they will, too. They're clearly not going to do March, and it may be the middle of the year before they make the first cut, or even,
Well, that's a grim picture you point, and you do hold out the hope that maybe AI and technology could increase productivity, and maybe we catch up with some of this stuff. But do you think AI can be a net positive for employment? What if it's not? We're going to be a UBI. We're going to be a universal basic income country someday. It may increase productivity, but no one's going to have a job.
You know, Joe, there's never been, and if you think about this, I think you'll agree, there's never been a major technological breakthrough that hasn't been employment positive.
Is this the first one?
No, I don't think so. I think, and if you look back even at the internet, you have search optimization engineers now and specialists. In the mid-'90s, in the late '90s, who would have thought of a search optimization engineer?
Yeah.
Right? So you have a whole set of jobs that are created out of the emerging technology. I think AI will certainly enhance productivity and probably create new jobs in industries that the three of us couldn't conceive. Nobody can conceive of. So that.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And I was going to save this video for Sunday because we have Rockefeller's Capital Management, Greg Fleming. And yes, the founder was John D. Rockefeller. And basically, he's coming in with the perfect Hegelian dialectic, but then he's also coming in with the truth bombs. And he states that other countries are looking for alternatives to the United States dollar. But guys, we know what he's talking about. He's talking about the BRICS nations, and they already have the alternative, the digital yuan. And the United States has all this debt, And China and Japan are no longer buying the amount of treasuries that they were. So it's going to be a supply and demand issue, and we're going to see yields rise. And he states the Fed jumped the gun in the fourth quarter of last year. But we know, guys, they did it on purpose. And he also knows this. It allowed the stock market to keep running. So then therefore the mainstream media could keep saying, oh, the economy is wonderful. And we know why. It's the election year. Like I told you, enjoy 2024, because 2025, you're going to think you're in a horror movie. And then we have Joe talks about universal basic income and AI. We're not going to have jobs. And then, of course, Fleming says AI is going to create more jobs. And guys, we know that's definitely not correct, because we know the plan. And we're seeing layoff after layoff after layoff. But if you're smart and you understand the fourth industrial revolution, you can have 10 people inside of a company with like minds and build $1 billion company because of this technology advancement. If you look at Sora, it is amazing. But think about it, guys. They haven't even turned on the supercomputers yet. And we know they have technology sitting in the back that's going to change all of our lives forever. And they have all this data. They know you better than you know yourself. And remember, the crypto teacher told you. Now we have Michael Saylor, the spokesperson of Bitcoin. And remember, guys, it's the same guy that said Bitcoin stood no chance, the government would squash it. Now he's the Bitcoin spokesperson, and we know who hired him. Morgan Stanley. And he keeps talking about cyber money, cyberspace, because we know they want us inside the metaverse. And they bring up the Rockefellers. If you have my NWO book, you know all about the Rockefellers. But the Rockefellers definitely did not give us oil. They monopolized the oil. And we see the Rockefellers right along with all the prominent families getting ready for the fourth industrial revolution. And remember, the crypto teacher told you. And because of the Fed, we've been seeing a market rally that makes absolutely no sense. We're getting a rally, even though they're not going to be cutting, but we're still moving up. And what is that, guys? It's all an algorithm. You can see it being reallocated. If you know what you're looking at, you can clearly see it, because none of it makes absolutely no sense. You only have a few stocks, especially in the last 2 quarters of last year. You only have a few stocks. The Magnificent Seven getting all the money. That is impossible, people. But we know that's all for the fourth industrial revolution, where the robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep go inside the metaverse. But before that can happen, guys, we know we need that crisis. We're seeing all these layoffs. We know the whole point of AI, yes, is going to increase productivity, but the masses are going to be out of work. And that's where universal basic income comes in. And we see it being tested across the globe. And we saw the big test in 2020. People were happy to sit at home and get free money. But we know if you rely on the government to feed you, they're definitely going to starve you. And that's the reason why they have the metaverse, for you to sit at home and travel from your couch. Remember, guys, everything is going to be tokenized. This whole real world is going to be placed in the virtual world. But the only thing about it is, guys, if you don't know whether you're in the real or the virtual world, you'll get stuck in the virtual world. And if they're able to download you, we know they're able to delete you. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
OpenAI has unveiled its new text-to-video model. It's calling it Sora. It generates videos up to 1 minute long based on whatever prompt a user types into a text box. Take this, for example. If you use the prompt, "The camera directly faces colorful building in Burano, Italy. An adorable Dalmatian looks through a window on a building on the ground floor. Many people are walking and cycling along the canal streets in front of the buildings." This is what you get. Wow. Look at that. time to hand in your resignation, everybody. They're just going to say, give me Sarah Eisen, Mike Santoli, and David Faber in digital form, and, have them tap my stuff.
Robert asked me on his show, what is money? I had never questioned what is money. And then we explored it together for many, many hours. And when I finished that exploration, my conclusion was money is economic energy.
Economic energy, what does that mean?
Yeah, it is the question of our time, Charles, and it's a question that I went most of my adult life without understanding. But economic energy is capital. Economic energy is wealth. And so if you think about the wealth in the world, there's maybe $900 trillion of it right now, and it's tied up in real estate, in stocks, in bonds, in currencies, collectibles, et cetera. The challenge is that that capital is analog capital from the 20th century, and Bitcoin represents the digital transformation of capital. And your chart you just showed with those ETFs shows that every day in the last 5 days, $481 million is flowing out of the analog world into the digital world. And what's going to drive Bitcoin is, in essence, the conversion of analog capital to digital capital. The killer use case is capital preservation and capital appreciation. And, the name of the show is Making Money. That's what everybody wants to do, and money is capital.
In the same podcast, you talked about Rockefeller and I guess the baron, some of the so-called robber barons in general, who in modern times get a bad, it's a bad thing to be a robber baron, right? But we know they helped to change the course of humanity for net for the positive. But just the implications of what can be done once you convert, this conversion you're talking about, going from the analog wealth, converting it into digital wealth, how much more it could be a positive for humanity overall?
Civilizations, they rise or fall based upon the creation and channeling of energy. And we think of power as energy delivered in a certain period of time with a focus. So it's all about firepower, naval power, air power, nuclear power. Rockefeller gave us liquid energy in the form of oil. Bitcoin is digital property. It's conveyed by digital power. Those Bitcoin miners are digital power providers, and it's the most powerful computer network in the world. So we see this as profound because there's hundreds of trillions of dollars of wealth in the analog world, and there's no doubt it's decaying. Bonds are losing value because of inflation. Real estate's losing value due to just physical decay. Stocks lose value because of competition and product cycles and acts of God. And so the people of the world, they're looking for a new idea, and Bitcoin is this idea of put your money in cyberspace where it's not going to be affected by weather and war and supply chains and all of the things that have plagued us in the 20th century.
Now, to that end, I know MicroStrategies has sort of rebranded itself. I think it's called now Bitcoin Development Company. What exactly does that mean? And are you moving completely away from the traditional business?
Now, we've got a very healthy software business, but we've now got nearly $10 billion in Bitcoin, and we've got a very large equity market cap, and we can tap the capital markets as an operating company, and we can leverage our market cap in order to issue equity, issue debt, buy back our debt. We can restructure our capital structure so that our shareholders get more Bitcoin. So just like, you want to develop New York City, you're going to borrow money and you're going to build a building. What we're doing is we're issuing securities in order to buy Bitcoin, in order to promote the Bitcoin network, lock up the Bitcoin forever, and then build the entire ecosystem.
This week we saw that hotter than expected CPI report, a steep decline in retail sales, not good for the market, more layoffs as well. Let's talk about the implication for rates.
It's well, the rate implication means it's pushed further out. Right now, when I looked this morning, we were at 3 rate cuts this year. And of course, at one point we were at 7 rate cuts this year. I think the irony of it all, though, is the market is still rallying. Think about this. That October rally was sparked because of Powell's semi-victory lap. And he says, okay, our goal will be 3 rate cuts next year. Wall Street immediately interpreted that to be 7. So the market rallies in front of all these massive rate cuts that now they're understanding won't happen. But still, the momentum, the bias, even though there's a little red on the screen right now, without a doubt, the bias is still significantly to the upside. So Wall Street's sort of ignoring that. and just focus on the notion that new highs, we got new highs, and finding any sort of reason right now to keep this thing going.
Talk about highs begetting new highs. You could argue Bitcoin maybe in that. We talked a lot about 52,000, some of the highest levels yesterday we hadn't seen since December of 2021. A lot of this, I think we came around the table, and when the ETFs were approved, you didn't see that big rally. Now you're starting to see it. Is it on the ETF news? What did Michael Saylor have to say?
You know, I had a great interview with him yesterday, and I got to tell you, it was one of these things where, you know, he talked about economic energy and things like that, you know, and this whole thing for Bitcoiners is just a temporary move, right? They're looking for it to go significantly higher. But to your point with the spot ETFs, there was there was a little bit of industry stuff there. One of them saw a lot of folks get out of it. There's a lot of things based on fees. So there was a big spike. Then we saw it go down. But all of a sudden, we see money pouring into these ETFs. And also, it gives it the stamp of Wall Street's approval. Whether that's true or not doesn't matter, right? Now, all of a sudden, these same firms that a few years ago were saying it's junk, it's garbage, stay away from it, are offering ETFs. And that is a whole different kettle of fish. And I saw Neil just had the Coinbase guy on. Just real quick, just give an example of Coinbase. So they actually they made less money last year than the year before. But that fourth quarter, $905 million versus $600 million a quarter before. And